Okay, well, good afternoon, everybody. I want to thank you for taking some time to join us. My name is Craig Rubrecht. I'm joined today with my partner Andrew Smith. Andy and I are both managing partners and financial advisors here at Cornerstone, and look forward to sharing some time with you this afternoon and talking specifically about the CARES Act. As we take a look at the CARES Act, and by the way, it stands for Coronavirus Aid, Relief, and Economic Security Act. It was passed by Congress on March 27th of this year. And Ashley, if you want to go ahead and jump to the first slide, there's and then one more there, if you will. There's a lot, several phases. Specifically in the CARES Act, it's a $2 trillion. I know you've all seen that number thrown around, a $2 trillion stimulus package. When you think about this in comparison to the last time our government was required to do something of this size in a crisis back in 2008, you compare it to $800 billion that was put in place back in 2008. So $2 trillion in a number is unprecedented. There's several areas when you really dig into who are the recipients of this stimulus package. And so I'm just going to give you all just a quick overview of the entire stimulus package, and then I'm going to turn it over to Andy, who's going to talk about specifically what it means to you, what it means to us, whether you're still working, whether you're retired. But there's several areas. There's actually 11 in total. I'll just run through these very quickly for point of reference. Of the $2 trillion in the CARES Act, $260 billion is going towards unemployment benefits. So if you or somebody that you know, a family member or a loved one, is filing for unemployment benefits, they have increased unemployment checks by $600 per week. The government has extended the duration of unemployment insurance for 13 additional weeks, and then they've expanded eligibility. Next, there's $290 billion for one-time checks that will be issued. We're going to talk about these one-time checks a little bit later in the presentation, but $290 billion is allocated. Next, you may have heard of small business loans, the Paycheck Protection Provision. This is allocated towards small businesses with fewer than 500 employees, $380 billion allocated here. Next on the list, large businesses, $504 billion. It's specific, it's interesting to note that of that $504 billion, $25 billion is going directly to the airlines. But this is actually a loan facility that they opened up for not only just large businesses, but also states and local governments. $42 billion in additional food stamp, child nutrition and housing support. Health spending, $180 billion, and this is mostly going towards hospitals, think temporary structures, emergency supplies that are needed in hospitals. FEMA is going to receive $45 billion. The Department of Education is going to receive $32 billion. And then when you look at another $10 billion for individual tax, and this is where we're going to start to talk about things like RMDs and distributions and some changes to the tax code in addition to charitable contributions. And then last but not least, businesses. In taxes for businesses, there's relief for about $280 billion. And so there's a lot going on in this bill. I don't know if anybody checked my math on that, but all of those 11 categories add up to the $2 trillion So again, we actually did a call last week. If anybody has any specific questions, if there are any small business owners on the line, there's still time to apply for the PPP. If you haven't already done so, we have some resources where we can help. But again, the purpose of the call today is to talk specifically about individual tax breaks that you'll be receiving, along with the one-time checks that have actually, I believe, just maybe today have started to go out. So Ashley, if you'll jump forward maybe 2 slides, and Andy, why don't I kick it over to you, and can you walk us through some of the provisions starting with RMDs for 2020?
Certainly. Thank you, Craig. I appreciate that. So RMDs, a lot of times we throw around acronyms. So what does it stand for? It stands for Required Minimum Distributions. So for those of you who are retired and over the age of 70 and a half, you know what these are. There's a note on the slide here that says 72 if born after 6/30 of 1949. So for those of you that were born after 6/30 of 1949, you're probably already aware, but as a part of the Secure Act, which was a different act other than the CARES Act, you are now required to start your distributions at age 72. So obviously this applies to all of your IRAs if we're managing those. If you are in a 401k plan, obviously not working, it will apply to you. Most likely you've rolled that over to an IRA and consolidated that. But any type of qualified plan that will apply to the distribution. On an annual basis, Cornerstone calculates those, and it does include outside balances. So you want to make sure you disclose those to us when we're calculating these. And then in addition to the age 70 and a half or 72, for those of you who have inherited IRAs or inherited Roth IRAs, this will also apply. So what's changed? So I just talked a little bit about the current law. The CARES Act will allow us to basically waive your RMD for 2020. So this is going to apply to any IRA distribution that you're taking. Some of you have those set up to where they come out automatically. I've spoken to several clients already in which we have stopped that. And of course, we will resume those in 2021. So this will apply, like I said earlier, to 401k, 403b, 457b, which are governmental plans, and of course, IRAs. These do not apply, this waiver does not apply to defined benefit plans. So these are pension plans, for example. For those of you who turned 70 and a half last year before the change, there's a special provision within the code, and I have a few clients this applied to, where they could actually delay their first distribution until the following year, which is this year, April 1st of 2020. So if you've taken that out up until April 1st, obviously, that just recently happened. This bill was signed on March 27th, so obviously that didn't give you very much time to make that change. So one planning strategy that this applies to that we have discussed as a firm is actually using a 60-day rollover. So you can actually move that money back into the IRA and make it as if it didn't happen. So we can talk about that specifically if that applies to you, but that's what that's referring to. And as we stated earlier, anyone who has inherited an IRA or Roth IRA, you can also stop those distributions. So couple reasons why you would stop distributions, right? This provision was added to provide some relief. When your account balance is down, you certainly don't want to take a distribution from your account unless you have to. So for those of you that had the calculation, we came off of a great 2019. Your balance was up. We did the calculation for RMDs off of last year's balance on 12/31 of 19. So now we start taking distributions out and your account balance falls. We've started to rebound here a little bit, but it's going to be a volatile year. So if you want to stop those distributions, that will obviously preserve some of your balance for the rebound. In addition to that, as you well know, the taxes that are applied at the federal and state level eat into your distribution. So you net the difference after your gross distribution, taxes are applied. And if you live in a state where you pay state taxes, federal taxes, and then you get what, the net difference. So obviously that will save you in taxes. There are several clients I work with where husband and wife are both taking distributions, and they're very sizable required minimum distributions. And sometimes that could put you into a new tax bracket. So lots of planning ideas around this. Certainly make sure you talk to your advisor offline. We can have discussions with you to see how we can help you. We have had some questions just around QCDs, which are qualified charitable distributions, and there's really no effect there. So if you're sending money directly to a charity, this provision doesn't apply. Just wanted to let you know that. So again, if you have any questions, let us know, but this is a great way to reduce some taxes, preserve your balances, and try to plan for 2021. Next slide, Ashley, if you don't mind. So as part of the CARES Act, there are several things in addition to RMDs related to being able to take out withdrawals from qualified plans such as IRAs and 401ks, also being able to take out loans. And so we're going to address all of those. But in order for an individual to qualify, you can read these obviously, but the first qualification is being diagnosed with COVID-19. Or you have a spouse or a dependent who is diagnosed with COVID-19. And either one of these, this has to be a test approved by the CDC. So obviously you have to prove that. And if you're audited, you would have to show proof. The third bullet, which is a lot more information, but if you've experienced adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having your work hours reduced because of the virus, being unable to work due to lack of childcare due to the virus, having your hours reduced or your business closed due to the virus. So this applies to a lot of people. So for what I'm going to cover in the next slide, you have to qualify to be able to use these withdrawal provisions and loan provisions. So the first one, and I actually had a client use this one as well, where they had a loan set up on a 401k plan, and we actually handled the 401k for them. Took out a loan to help start up a business. It was a fairly new 401k for us, and it was a fairly new company. But he wanted to move his IRA in and then basically start a loan to help fund his business. Well, this happens. COVID-19 comes along, obviously affects his business, and he already had the loan outstanding on his plan. So if this applies to you and you have a loan at your company, you can literally stop the loan payments for up to 1 year. So what happens, and this is for an existing loan. So what happens is he stops the loan in this case, the interest will continue to accrue. Now this is interest that you're charging yourself. So you're paying yourself back this interest that's going to accrue. And then at the end of the suspension period, the loan is re-amortized and there's a new end date. So the term will remain, you'll complete the rest of the term, and you'll begin making payments after that year. So this is just to provide a little relief, and this is kind of the timeline, so to speak. Next, Ashley. So the current law allows a participant within a 401k plan to basically take a loan equal to $50,000 or 50% of the account balance. So it cannot exceed $50,000. So if you have a $25,000 401k balance, then it would be $12,500. If you had $1 million balance, then you could only take $50,000. So just be sure everyone's clear on the rules. The CARES Act now allows you to take up to, for 180 days from the time they pass this bill, up to $100,000 or 100% of your vested account balance. So in that case, if you already had a $50,000 loan outstanding, you could take an additional $50,000 loan. If you have, I'm sorry, go back to that, Ashley, if you don't mind. So you must be a qualified individual. And one thing that I had to look into pretty closely is if you take that additional $50,000, you can actually defer the loan payments for a year on that as well. So just be aware of that. If you take that additional 50,000 or up to 100,000, it doesn't just apply to the first loan. It applies to both loans if you want to do that. Okay, next slide. So this is a new term for all of us, really. Coronavirus related distribution, lots of acronyms. So this one's CRD. So this is in addition to taking a loan from your 401k. This also applies to the 401k plan, but it can also apply to IRAs. So you can see the list of types of qualified plans. So in addition to 401k, money purchase plans, this does include defined benefit plans, whereas the other one did not. Of course, 403b, governmental 457, and of course, I mentioned IRAs. And this only applies to 2020 distribution, so only for this year. So if you wanted to take up to $100,000 out of your 401k or your IRA, you basically can do that if you're qualified. So again, you have to go back to the criteria. So what are the advantages to this? Well, some people want to take the distribution and have no intentions of paying it back, right? Some people want to take a distribution and pay themselves back. They understand it's their retirement. They certainly don't want to take it out with no intentions of paying it back, but this would allow you to take the distribution. And if you don't, want to put it back in, then obviously you can pay the taxes. And in this case, they will let you pay that over a 3-year period. You can also pay it in 2020 if you want to, but there's also a rule that says that you actually have the ability to put the money back into your plan, in this case, an IRA. If you take the distribution from a 401k, the guidance that we have so far says it has to go back into an IRA and basically do a rollover. So you have a 3-year period to put that money back in. So a couple things to note. There will not be a 10% penalty, which is stated on the slide here. And also for a 401k plan, a lot of you, if you've ever taken a distribution, have a 20% mandatory withholding, and that won't apply either. And so these are some really neat ways to provide some relief. If you have any questions about this, obviously just give your advisor a call and we can provide you some more guidance.
Great, Andy. Thanks for running through that. Maybe I'll jump in and talk a little bit about a few additional provisions in addition to distribution. So student loans, you can see, and there's a few things in terms of defined benefit funding, and these are some things that we'll go through with our clients who are plan sponsors as they apply. We have some clients who are employers that offer tuition reimbursement as an employee benefit. It's interesting that you can now cover up to $5,250 in student loan repayments completely tax-free in 2020, so that reimbursement program can be extended to student loan repayments. I mentioned earlier on the call that we were going to talk a little bit about these individual payments, and the IRS has started to make these payments, and it looks like they're getting started with the first about 60 million. And what we've learned is that the IRS is depositing these checks for folks with whom they have direct deposit information already on file from previous tax returns. As you can see in the text, individuals are set to receive $200, $2,400 for married couples, and then $500 per child. Now, it's the delineation there is under the age of 17. If somebody is being claimed as a dependent and they're under the age of 17, then there will be an additional $500. Couple items to note with respect to income limits for married filing jointly, for couples filing jointly. this is for under 150,000. You'll receive the full 2,400. For individuals, single filers, it's adjusted gross income of 75,000 and less. Now, for couples filing jointly, there's a phase out. It begins at 150,000 and it caps at 198,000. So if you're making over 198,000, you will not receive any rebate. Anything between 150 and 198, again, for married filing jointly, you will receive a payment, but it will be prorated. It'll be a reduced amount. And for those of you who are filing single, then the 75,000 begins to phase out on up to 99,000. So over 99,000, you will not receive a payment. In addition, Ashley, if you want to go to the next slide, many of you may already know that the tax filing deadline has been extended. And so instead of April 15th, which is tomorrow, it'll be extended to July 15th. Still note that you can extend all the way on out to October 15th. It's just that any interest or penalties for non-payment will not take place between now and July 15th. I've noticed just one question come through. You'll notice at the bottom of your screen for Q&A, and just encourage everyone to take advantage of that. Once we finish up here in a few slides, we'll go ahead and answer any questions, but there is a section down below if anybody wants to type in any questions. So let's see, as far as some additional notes on tax filing deadlines, in addition, IRA and HSA contribution deadlines have been extended. So for those of you that are making 2019 IRA and or HSA contributions, you, instead of tomorrow being the deadline, you now have until July 15th. Just a quick reminder for 2019, for those of you that want to make IRA or Roth IRA contributions, $6,000 for 2019, and then a $1,000 catch-up. For HSA, single tax filers, $3,500, for families, $7,000. And then remember, on the HSA, for anybody that's over the age of 55, you have a $1,000 catch-up in place for the HSA.
And Craig, that's until 65, so.
HSA contributions can be made up until age 65. That's right. Yeah, thanks for reminding on that. Andy, you also mentioned QCDs earlier, and I think it's important to note that even though RMDs have been suspended, and Andy, you also accurately noted that some listeners on the line are taking RMDs, and they may or may not have the ability, just due to budget constraints, and so the suspension is optional. But the QCD is still available for those who are over the age of 70 and a half. And just as a reminder, if you're making contributions directly to charities from your IRAs, that's still available up to $100,000 for those who are over 70 and a half. And another note, just from a charitable contribution, the IRS does now allow up to $300 of contributions, which is what we call above the line contribution. So in other words, if you're not itemizing on your tax return, everybody is able to benefit from a $300 up to a $300 charitable contribution. And then in addition, for somebody in a unique situation that wants to give a significant sum to charity, In the past, that was limited to 60% of your adjusted gross income was the maximum deduction that you're able to receive from for a charitable contribution. So the IRS has now made that limit 100%. 100%. Again, a bit of a unique situation, but Andy, as you pointed out, inside of all of these laws and tax law changes, just opportunities for some planning, and these, of course, necessitate conversations with everyone's financial advisor, which we'll encourage as those come to mind. So that's just a change from a charitable perspective. The last thing I'd like to note, and I'd be remiss if we didn't talk about this, anytime there's unfortunately, a crisis like the coronavirus, a crisis that involves government intervention at these levels, unfortunately, it invites additional scams and just foul play and criminals that come out of the woodwork and try to exploit the situation. And when it comes to and by the way, going back to individual checks, there is a site. If you go to irs.gov, the IRS is going to set up a website where you can go in and check. And I believe it's just part of irs.gov, where you can actually check on your tax distribution. But it's important to note that the IRS will never call you. The IRS will never text you. The IRS will never email you. And if you're ever contacted verbally via text message or in an email by someone claiming to be the IRS, it is fraud. It is a scam. The IRS will only communicate with you via the U.S. mail, and I can't stress that enough. We've already started to hear about again, criminals trying to navigate all of those mediums. So with that, let's take a look at some of the questions. So one question was somebody who, and Andy, actually, you and I were talking about this a little bit before the call, somebody who may have had income that would have precluded them from receiving this distribution check due to income in 2018. However, they, based on income in 2019, they would qualify. They filed their taxes on April 6th. And so in that scenario, and it's interesting because the IRS, if you have not filed your 2019 taxes, the IRS will use your 2018 tax return to distribute this check. And so somebody who now qualifies, that's very important. So the answer to the question is yes, you will now qualify. And I think it's important for anybody out there who is in that boat. It's important to go ahead and expedite, your tax return. Go ahead and file so that you'll benefit from that check if you're in that scenario. So that's a good question. We were just talking about that a little bit earlier. So again, and again, the payments, and that's another point too, is when if you're going into the system in the IRS and you go ahead and you file your tax return, if you feel comfortable providing direct deposit information, the IRS will then use that to do a direct deposit right into your bank. I had somebody type up a note asking about the PPP. And so again, this is for small business owners. And I would also just note, if there's anybody on the call who's an independent contractor, and so you don't have to have employees, you can be an independent contractor to apply for this loan through the government. Unfortunately, this program has not been well run, in the sense that I don't think the government has done a good job coordinating with banks. Now, in their defense, their objective is to try to get this money out as quickly as possible. But I do know, in the spirit of your question, I do know that nonprofits are being prioritized. Each bank is kind of managing their own queue. So my understanding is that banks are prioritizing certain customers, veterans, minorities, nonprofits. I don't know that there's any rhyme or reason, though, as to who they're pushing through the queue faster than others. But to your question, you could consider another financial institution if you're not getting the results you want with them, or you can certainly try them back. And so let's see, we had a few other questions come in. So let me just read through a few of these. Will a parent whose income is solely Social Security and is claimed as a dependent receive a stimulus check? So I do know that folks who are retired on Social Security will be receiving stimulus checks directly. Those who are claimed as a dependent, however, I know they have that cutoff for 16 and under if you're claimed as a dependent. So on that one, Andy, we might have to follow up on that one. But my understanding, though, is in that scenario, you would not receive a check. And actually, Andy, you did the research on that. I think you were pretty clear on that. If you're over 17 claimed as a dependent, you will not receive a stimulus check.
Right. Well, it's because they're a dependent. So yeah, that's accurate. Yeah. But as far as retirees go, there's a lot of retirees on the phone. So just make sure you understand that you still have to meet the income qualification. So if you're retired and your income's higher than those limits, then you will not get a stimulus check.
Yeah, and then a few questions. I think we may have answered these already. There were a few questions that came in regarding 2018 versus 19 tax returns. And so again, if you haven't filed 19, the IRS will base it on 18. So I think we've talked about that already. Okay, let me just go back.
One other question that came in, and actually this is an unfortunate situation where they qualified in 2018. They just recently filed their 2019 tax return, but don't qualify. So I have consulted with a CPA, and I will tell you the guidance so far is that you would not qualify, unfortunately.
Got it.
Yeah.
Another question, Eric, the stimulus check is not taxable. So that just came through. Another question on the PPP. So yes, we can help with PPP applicants. We have a handful of that we work with. So and it's interesting. With banks in the PPP, it's driven through the SBA, and so I think where banks are having problems with this is if previous, to the CARES Act, if not participating in SBA loans, then I think it's more likely they're having trouble. But Diane, connect with me after the call, and we can see if we can get that through the system for you. Okay. Great. Let me just double check the queue. I'm not seeing any more questions, come through. We have one more. So this question, you've been married, filing jointly 5+ years. IRS has bank routing and account numbers. Yeah, and so in that scenario, for those of you where the IRS has your bank routing, has your account numbers, then you actually will be in the first tranche of people that they're focusing on for these checks. And so nothing else that you need to do as far as having that deposited into your account. And so that is a scenario where you will be expedited when the IRS has your information.
Hey, Craig,
Yep.
one other question that I had from, I believe it was a few days ago. Can stimulus money be designated by an individual taxpayer as a charitable contribution for a tax advantage?
Yep. Yeah, and so that goes back to, well, the answer is the first 300 of it, unless you're itemizing. And that's where the IRS has allowed the first 300 of charitable contributions to be, quote unquote, above the line, immediately deductible. If you're not itemizing, then you won't be able to, receive. But of course, you can give whatever amount of that check to charity that you want. And if you're not itemizing, though, only 300 of it will be deductible. I think one last note, Andy. I was taking some notes as you were talking, and you referenced somebody who's already taken an RMD for 2020, and there is that provision, Andy, that you mentioned to roll it back in to an IRA, and so that's just a note, right? So somebody that's listening in that has already taken an RMD that now understands that it's optional. If it happened in the last 60 days, you could actually affect a rollover, and the IRS only allows one rollover. We just had another question come through. If somebody if you take that stimulus check and you use it for an HSA contribution, and I'll just expand on your question, sir, you could also use it for an IRA contribution, and so depending on your tax situation, that would be a tax break, that you could benefit from.
Which, Craig, one comment on that. So
Yeah.
IRAs for deductibility purposes obviously have phase out limits, but HSAs do not. And so
HSAs do not. That's right.
but you have to have a high deductible healthcare plan. So just keep that in mind when you're going to contribute.
I had another question that came through, piggybacking on the direct deposit question. And this is for people that did not receive a refund direct deposited in 2018 or 2019. Will my check come in the mail? And that goes, so the IRS will be opening up their website for you to go in and provide, if you'd like it directly deposited, there will be an opportunity to provide the IRS with direct deposit information. And I was reading some of the regs on that today, and all it provided, and as I mentioned, call, that has to be through irs.gov. I didn't have a chance to go in today to look and see where they're directing you, but I would just encourage you guys to take a look at irs.gov, see if there's a CARES Act link up and running yet. And then just one last question on reviewing the qualifications for Andy. You talked about this earlier for the waiving the 10% fee on the 401k. So maybe just a reminder, right? Either you or your spouse was tested positive for the virus, or and Andy, as you mentioned, this is really a broad category. If you have been financially damaged, if your business revenues have declined, if you for anybody who's a business owner, if you've been furloughed, if you've been laid off, these are all qualifications. But certainly, somebody as a business owner that has a decline in revenues as a result of the virus, you absolutely would qualify for the waiver of the 10% fee on the 401k, or rather penalty through the IRS. And remember, that only applies if you're under the age of 59 and a half. For those of you where it qualifies and you're over 59 and a half, the benefit to you is that you can spread if you choose not to repay it, you can spread the taxes out over a 3-year period, or have 3 years to pay it back without paying any taxes, for that matter. Okay, so that looks like that does it on our Q&A. Thank you. Thank you. Oh, well, let me. I just had just 2 more come through. I'll just address these last 2 since they just popped up. Yes. So just a clarification. It's I mentioned the 150,000. It's not taxable income. It's adjusted gross income.
Yeah, it's AGI.
Yep. So the question was whether it was taxable W-2 or AGI. So it is AGI for married filing jointly, 75,000 for single. And then just a comment, around the IRS and the SBA. When you apply for one of these loans, and again, this comment is just directed regarding a business owner applying for a loan through what's called the PPP, payroll protection plan, that ultimately turns into a grant. They're looking to push these out very quickly and very efficiently. So all you have to do is make an attestation that you were disadvantaged as a result of the virus. Our expectation is that on the back end of this, when the dust settles, that the IRS and the SBA will be very critical of those applications. And then, just a further note, somebody mentioned the EIDL, which is another loan. It does require a personal guarantee. So, so just note that on the back end of those loans, the SBA and the IRS will be very critical if they don't feel that somebody legitimately would have qualified. And we're happy to talk through that with anybody who's contemplating one of those loans. Can talk through those with you. And again, all of the topics that we've talked about today, Andy covered a lot of ground, as did I, and we would encourage everyone, if you have some follow-up questions, feel free to reach out to us. Feel free to reach out to your advisor. As we mentioned, just a lot of planning opportunities that exist. And so let me just again thank you all for joining us, and take an opportunity to thank you for your business. Really appreciate it. Really, and more than anything else, we just look forward to the day where we can visit with all of you and see you other than through a computer screen. I know it's all been a challenging time, but we'll certainly get through it together. And we'll look forward to hosting you on our next call. So everyone take care. Have a great afternoon.
Yeah, thanks everyone. Have a great day. Have a good week.